Always taking things a little step further, our business guru, Brian Quinn, is with us here on set. He is starting with reports today that Chinese officials may be exploring a potential sale of TikTok to Elon Musk, Brian.
So Bloomberg is still reporting that Beijing is in preliminary considerations to see the popular video sharing app sold to and eventually incorporated into Elon Musk's X social network, formerly known as Twitter. The clock is ticking after the U.S. Congress passed a law last year that would require TikTok's Chinese owner ByteDance to either sell the platform to a U.S. buyer or face a nationwide ban. That law is set to take effect this Sunday, one day before Donald Trump is once again sworn into office. Trump initially supported a ban on TikTok. He changed his mind, though, after one of the company's top American shareholders became one of Trump's political campaign's top donors. Now, TikTok's value has been estimated at $40 to $50 billion. And though Musk is the world's wealthiest man, it is not clear how he could pull off such a transaction, especially after buying Twitter. The company has dismissed the Bloomberg report TikTok has, that is, as pure fiction. It's hoping for a reprieve from the U.S. Supreme Court, arguing that U.S. government fears that the company could be forced to share American user data with the Chinese government are unfounded. Take a listen here.
The United States government concedes that it has no evidence that China has ever attempted to date to control the U.S. TikTok platform. It concedes that China has not attempted to censor content on the platform in the United States. It concedes that China has not attempted to misappropriate user data in the United States.
Time to check in now on the markets. How are they shaping up, Brian?
European indexes start opening higher as investors rotate out of both big U.S. tech shares as well as government debt and into basic resources, construction and industrials, which are leading the way on European indexes. That is the Asian markets. We'll get to that in just a minute. The FTSE in London is lagging behind its continental peers as falling oil and gas prices send energy shares lower. See the FTSE trading flat there. BP shares down nearly 3% as it issues a profit warning. The CAC 40 here in Paris, though, up more than 1% at the open. See if we can get those Asian indexes back. They're mixed on Tuesday. The Nikkei, coming back from a Monday holiday, caught up with the losses that the rest of the region already notched yesterday. Japanese government borrowing costs hitting a 40-year high there. Chinese indexes, though, gaining following the Dow on Wall Street amid that tech rotation. Shanghai up more than 2.5%.
So finally for business then, the Spanish government is trying to ease a housing crisis there, in part by cracking down on non-EU home buyers.
Spanish Prime Minister Pedro Sanchez announced roughly a dozen new measures Monday as his government seeks to address a long-running shortage of affordable housing. The most striking elements of Madrid's new plan are new taxes, including a tax hike on holiday rentals and a new tax of up to 100% of the purchase price for homes bought by non-residents from countries outside the EU. Eliza Herbert has the details.
A society divided into two classes, rich landlords and poor tenants. That's what Spanish Prime Minister Pedro Sanchez has said he is trying to avoid by rolling out a swathe of measures to make housing more affordable, including taxing non-EU residents 100% on real estate purchases.
Lo que sobran son Airbnbs.
There are too many Airbnbs and there's a lack of housing. Therefore, the duty of the Spanish government is to prioritise the residential use of apartments and prevent speculative use of property from continuing to expand in an absolutely uncontrolled way.
Spain has long been a hotspot for tourists enjoying its cities, coasts and islands. Its sunny climate has attracted property buyers from afar, such as Britons, Germans and Moroccans, who are currently only subject to a tax between 7% and 12% of the property value. According to Sanchez, non-EU residents purchased 27,000 houses and apartments a year, not to live in, but for profit, while access to housing is the biggest problem for Spain's middle and working class. An issue he says extends across Europe, where housing prices have swelled 48% in the last decade, a rate far higher than household incomes. His proposal also includes expanding social housing by more than 3,000 homes and offering incentives to owners to refurbish vacant properties and rent them out affordably. Critics have speculated that the measures could prompt investors to turn elsewhere and are unlikely to become law, as Sanchez will now need to receive a majority in Parliament.
All right, that's it for business, Stuart.
Thank you very much, Brian Quinn, with the business for us.